Artificial intelligence is revolutionizing the tech world, but not all players are created equal. We're taking a closer look at two leading AI stocks, one that's a buy and one that's a hold for now. Apple's been struggling with stagnant growth, but a new iPhone and a major push into AI-powered services could be just what the company needs to turn things around. Meanwhile, Nvidia's been a beneficiary of the AI boom, but its valuation is looking increasingly stretched, and competition is heating up.
Which stock should you be buying hand over fist, and which one should you avoid for now?
When it comes to Apple's stock buyback program, I believe it's essential to understand the motivations behind this decision. But in the surface, it may seem like a straightforward move to create shareholder value, but I think there's more to it than that. Buyer properties. Apple's management has been accused of using buybacks as a way to artificially inflate the company's earnings per share, or EPS.
This can be a clever tactic, as it can make the company's financial performance appear more robust than it actually is.
However, I believe that Apple's buyback program is more than just a clever accounting trick, but I think it's a sign of the company's confidence in its future prospects. Apple has a history of making bold investments in emerging technologies, and I believe that this buyback program is a reflection of the company's commitment to its long-term growth strategy. Now let's talk about Nvidia. The company's dominance in the AI chip market is a testament to its early adoption and investment in AI-specific hardware. GPUs are the gold standard for AI computing, and the company's market share is a result of its innovative products and strong competitive edge. But however, I believe that Nvidia's success in the AI chip market is also a double-edged sword. But on the one hand, Nvidia's dominance in the AI chip market has given the company a significant lead over its competitors. This has allowed DCT to maintain its pricing power and generate strong revenue and profit margins. But on the other hand, I believe that Nvidia's success in the AI chip market has also made the company vulnerable to disruption. As AI work begins to move from server farms to laptops, PCs, and phones, Nvidia's data center business may be impacted. But here's the thing. I don't think Nvidia is worried about this trend. In fact, I believe that the company is well positioned to adapt to this shift. Nvidia's strong competitive edge and rapid advancements in graphics technologies make it a leader in the AI chip market, and I believe the company will continue to innovate and stay ahead of the curve. Now let's talk about the Federal Reserve's tapering of asset purchases. This move has had a significant impact on emerging markets, and I believe that it's a reminder of the interconnectedness of global economies. And the Federal Reserve tightens monetary policy. It can have far-reaching consequences for economies around the world. For investors, this means that it's essential to stay on top of global economic trends and understand the potential consequences of monetary policy decisions. That I believe that companies that prioritize innovation and investment in emerging technologies, such as AI and GPUs, may be better positioned for long-term growth and success. But here's the thing. I don't think investors should just focus on the big picture. I believe that it's essential to dig deeper and understand the motivations behind a company's financial decisions. For example, when a company engages in a share repurchase program, it's not just a straightforward move to create shareholder value. It's a complex decision that can have far-reaching consequences for the company's financial performance and long-term growth prospects. I believe that investors should be skeptical of companies that use financial engineering to manipulate their financial metrics. This can be a clever tactic, but it's not a sustainable way to create value for shareholders. But instead, I believe that investors should look for companies that prioritize transparency and accountability in their financial decisions. For example, Apple's buyback program may be a sign of the company's confidence in its future prospects, but it's also a reminder of the company's commitment to transparency and accountability. Apple has a history of making bold investments in emerging technologies, and I believe that this buyback program is a reflection of the company's commitment to its long-term growth strategy. In conclusion, I believe that investors should be cautious when it comes to financial engineering and manipulation of financial metrics composing. Instead, I believe that investors should look
for companies that prioritize transparency and accountability in their financial decisions.
Companies that prioritize innovation and investment in emerging technologies, such as AI and GPUs, may be better positioned for long-term growth and success. Finally, I believe that investors should stay on top of global economic trends and understand the potential consequences of monetary policy decisions. As we wrap up this episode of NewsPod AI from Big Blue Ceiling, I want to leave you with some investing strategies that I believe are suggested by this story. First and foremost, I think it's essential to be cautious when it comes to financial engineering and manipulation of financial metrics. But as we've seen with Apple's buyback program, companies may use these tactics to artificially inflate their earnings per share or create the illusion of growth. But as investors, we need to be skeptical of these tactics and look for companies that prioritize transparency and accountability in their financial decisions. Secondly, I believe that investing in companies that prioritize innovation and investment in emerging technologies such as AI and GPUs may be a good strategy for long-term growth and success. These companies are often at the forefront of technological advancements and are well positioned to capitalize on new trends and opportunities. Thirdly, I think it's essential to stay on top of global economic trends and understand the potential consequences of monetary policy decisions, as we've seen with the Federal Reserve's tapering of asset purchases. These decisions can have far-reaching consequences for economies around the world. Finally, I believe that investors should look for companies that have a strong competitive edge and are well positioned to adapt to changing market conditions. Nvidia's dominance in the AI chip market is a great example of this, and I believe that the company's strong competitive edge and rapid advancements in graphics technologies make it be a leader in the industry. But that's all for this episode of NewsPod AI from Big Blue Ceiling. Passes. I hope you found this story informative and thought-provoking. If you have any questions or comments, please don't hesitate to reach out to us. Now, if you're interested in learning more about investing in AI and emerging technologies, be sure to check out our website and social media channels for more information. Thanks for tuning in, and we'll see you next time on NewsPod AI from Big Blue Ceiling.